information with the banker strategy. We're going to answer your questions and going to be here to help you as we always do. So as you come on the line for us this morning, or with us this morning here, guys, let us know who you are and where you're watching from. Say hello, all that happy stuff. And we'll get started here in a couple of moments. Good morning, John Cullinan saying good morning. And hey, Martin, welcome. Now, is it Martina or is it Martin? Because you see, it says Martina on the chat and it says Martin in UK. So that's confusing. Hello, Sandy in Minnesota. It is Martina. All right, cool. Miguel's in the house from London. We got Sean in Fort Worth. Kenny, good morning, all. Yes, it is Martina in all caps.
He's one of Michael Angel Martin's team. Danny will be on this call.
Morning from the UK. David is in the house. We got Neil in Scotland. We got a user. Don't be a user, Chris and Nancy. Mukit, Mac, sorry, in the UK. Good afternoon, family. Rosanna is in the house. Good morning. Don, Jamie, Hassan, Spenno in London. Well, yeah, tons of people in the UK. Howard, Melody from Okie State. Keith is in Maryland. Welcome. All right, guys, cool. Welcome to the call today.
Anybody else? Anybody you missed?
I didn't. I think I'm good. Anybody else want to say hello? Did you want to go through them now, Jay, and read this?
Yeah, I want to say good morning to everybody. Hold on.
So this might be a little more fun. I can't guarantee it than our normal sessions. Hey, nope, here we go. We got more. Sean, Leonard. All right, cool. Guys, once again, Larry's in the house. We got Dale, Mary, Joe. Good morning, kids. Awesome. So, as you know, normal stuff. If you guys have questions, please do put them in the Q&A section. When you go, you type in the in the chat. Make sure that you select Q&A for that, so that we can have that nice and clean this morning. And yeah, no doubt, Martina, no doubt. So again, just if you have questions, we're here to help you guys, here to answer your questions and assist any way that we can. All right, I'm going to primarily turn this over to Danny to go ahead and get us started on what he's looking at, to go over some of what the banker strategy is, guys. Before we do that, I'm going to bring up my screen real quick, because I want you to understand, if you are brand new, guys, all you need to focus on is this strategy. Please make sure that you go over the Getting Started webinar. I do that every single Saturday at 3:30 Eastern, except for this coming Saturday because I won't be here. But unless I'm sick or traveling, 3:30 Eastern time on Saturday. It's recorded in the group, in the 1000 group every week. So if I'm not there, or you want to watch the recording, you're more than welcome to. But guys, I go over success principles as well as how to get started, including the unit section. So actually, let me just go ahead and pull up my handy dandy screen here really quick to just kind of show you exactly where that is, in case you are not familiar with Facebook. I'm sure you all are, but I'm going to show you anyway. Share screen. My 1,000 tabs. All right, so right here is the Team Abundance, right down in here. I'm not going to scroll down all the way because obviously it's going to probably be down a little bit. But the Getting Started webinar is right there in the news feed. And again, you can go ahead and come right in here to the unit section. And here's all of the unit section. Watch this first. What I tell people is watch the videos, do what it says, right? So you want to make sure that you watch each one of these, 1 through 5, right? And then unit 5 is where you're going to spend most of your time with the banker strategy. Make sure that you click see more posts right here. Go through this, and guys, here's the deal with this banker strategy. We have now figured out how to ride the coattails of the banks. The banks are the entity that controls or manipulates the market. And we're talking about manipulation. I'm talking about, we're getting entries because of this strategy that are small risk to huge rewards. So you have to learn what to look for. And Danny's going to go over that a little bit on his side as far as that goes. And I'm sure Jay will chime in as well as anybody else can as well. But you have to learn what to look for. You got to look for the pattern. You look for, when a harmonic scan comes in, look for, what the signature pattern is, the equal highs and equal lows and bankers candles and things like that. But you got to learn that stuff, right? This is not get rich quick, right? This is get rich long term. This is get rich for a long period of time, so that you never have to worry about money again. That is our goal, right? But it's dependent on what you do. It's dependent on what you do. If you get in here and you study, right, and it doesn't have to take you a whole long time, because we're here every day, Tuesday through Friday, giving you the answers to your questions and helping you out any way we possibly can, so that you can be successful faster. That's obviously our goal. To be able to come in here and to learn the strategy, to learn what to look for, so that you are not being like the rest of the retail traders, which is what we're all called, the 97% who fail, but rather you can be like the 3% that crush it. So that's what we want to help you with. All right, so let's see. Before I turn it over to Danny real quick, she says, Martina says, not new, been with you from the beginning, but still not seeing the move, only once it's happened. And that is okay, Martina. Okay, the deal is that you're going to, if you continue to look for that, right, that pattern, you continue to look for the the equal highs or the equal lows, the the FU candle, and the mitigation. You're going to, even if you're seeing it after it happens, you will start to see it as it starts to occur. Again, it's just training your eyeballs, right? And then the second part of that, right, is not trying to see something that's not there. That's where a lot of people will get into into an issue with strategies like this. Is that you think you see something, but in reality, it's not that, or you want it to be that, and you take the trade, and it's not what you wanted. But the nice thing about this strategy is that we have such a small risk to such a huge reward that you have the ability to make up for that if you do have a loss. That loss, as long as you're using proper money management. That's one of the keys with this strategy, and we don't talk about it enough, in my opinion. I talk about it on Saturday a lot, but we need to be really focused, guys, on using proper money management. Right, going into the risk calculator, which I think I have that. Up as well. If you guys don't know what that is, it's right here. So, put some numbers in here to give you an example. All right. Stand by real quick. I'll just show you this. Because if you should be using this, and I got this question a lot, as a matter of fact, you should be using this every single trade. Every single trade, you should be in here on the myfxbook.com. This is the web address right here. It's in the 1000 group. It's in all the information, right? And you should be using this for every single trade. And obviously, whatever your account size is, this number right here should be 2%. Your stop loss, you have whatever your stop loss is. It's going to vary by trade. So you're putting your stop loss, maybe that's, maybe it's 15 pips, right? And then you select whatever
this is, it's going to be live.
Your currency
What time to watch it?
Select the AN, for example. You push
Well, I'm
calculate,
recording it, so
bada boom, bada bing.
it's the one that happens it's usually Michael and Jamata, but it happens at 2 o'clock, Tuesday to Thursday, Tuesday to Friday.
Right? So
and they're just going over trade setups.
Trade, you should be in here doing.
I posted yesterday's in our group, John.
With the position size calculator, because you are going to have losses as you learn this, guys, right? And we actually show them right in the private group that you guys are all watching this now, right? In the I'mAbundance.com, we show the losses, we show how small they are, and we show you the wins and how huge they are. But you've got to get through those losses, right, without having your account blown to get to the wins. To have some equity left over so that you can benefit from that. So hopefully that makes sense, and it helps you as well. Because again, it is a huge, big deal to have proper money management with this strategy, especially. So, all right, cool. Yep, you're welcome, Martina. Awesome stuff. Miguel says amazing concept, and you're offering the pill like the Matrix, red or blue. So, all right, cool. I need to step away for 2 seconds, so I'm going to pass it over to my friend Danny, and he can go over what he's looking at right now, and then we can come back and answer questions, and we'll go from there. So, Danny, it is all yours, brother.
Cool, thanks, Jason. All right, guys, good morning. Hope everybody had a good week so far. I haven't seen a whole lot this week that really jumped out at me. Obviously, we shared EuroCAD with you. And as I'm sharing my screen, one thing that I really agree with Jason, yes, we have an amazing strategy that allows us to ride the coattails of these banks, but what makes this strategy work is that risk versus reward. So right when Jason said everybody should be doing this, look what I have right here. Every single time I get into a trade, I'm going to my position size calculator. Depending on the trade setup and according to my trade plan, which is something that you need to have. If you guys are trading freestyle without a trading plan, and you might be doing your risk management, you're not going to be successful in this. You need a trading plan. You need to trade out every aspect of this game, right down to a contingency plan, right? So that is super important to have everything planned out for entry, identification, management, and exit. So every trade I get into, depending on that trade setup,
John,
depending on,
are you making a tea?
Things that I see,
love one.
According to my trading plan, that will make, my risk vary.
Tony.
And also maybe according to my trading plan, the first week of the month and the last week of the month, right? So, it's very, very, very important to have a trading plan, follow risk management. That's what makes this work. When we have crazy risk versus reward, 10-1, or, for an example, right, we're allowed to, lose more than we win and still be profitable, but only if you are using proper risk management. So I can't stress that enough. So what we're going to do today, we're going to go over EuroCAD. This is one that we traded this week. We're going to just kind of give an update of what's going on and what I think, in my opinion, is going to happen, what I'm anticipating with this. We're going to go over a couple things on the harmonic scan, see what we have on the scanner. Then we'll run through a couple pairs that I've discussed with some of the guys this morning and what we're looking at that we can potentially get this week, and if not for next week. EU I'm looking at, NU I'm looking at, GU, and then of course I'm looking at gold as well. So we'll get into some of those pairs really quickly before I even get into this. Let's just see what we got going on FX book. So I know that we do have some Euro news. It's not showing up on here. We, of course, are showing this news right here. And just so nobody gets confused, for some reason, if you can look at my time right here, I have my thing set to Eastern, which is the time zone I'm in. You can see it's 9:13, but for some reason, my FX book is an hour ahead. So these times right here, just don't get confused. They're just an hour off right here, and I have to sort that out. So on FX book, I like to use FX book and Forex Factory to check my news, just to because sometimes I'll see things that are orange folder here and red folder there, or sometimes I might see something that's on FX book and won't be on Forex Factory. And I also like to check investing.com. So I see something in 45 minutes, red folder for Euro New Zealand, for Euro pairs, gross domestic product, which is in 45 minutes, red folder. As you can see, it's not here on Forex Factory. So I just like to check both of them just to see what's going on and make sure something doesn't sneak up on me that I'm not aware of. We also have some USD news. As you can see, we have this at 9:30. I'm also showing a couple things roughly 4 hours and 15 minutes from now. Initial job claims. Let me see here. Yeah, let me make sure. Because that's, you can see how contradicting it is, right? Stuff that I'm talking about isn't even, on this right here. So it's just good to, just go between both of them and just, double check everything. I use the app, so I'm not too familiar where it would be on here, but I'm not going to get too much into that. So let's check out EuroCAD. So EuroCAD, this was a signature setup. This was really nice. As soon as I saw this setup, this was textbook. Really was textbook, right? If you guys are having trouble identifying these setups, I know somebody said that they, are seeing them after the fact. I'll also show you what you can do to get into them if you miss this initial move as well. So to make it really, really simple, right? I mean, you probably hear everybody say, you want to ask yourself, where's the money? And what that means you know, in layman terms, of where retail traders playing, where are areas of support and resistance. You know, it can also happen on trend lines. Trend lines also can grab liquidity, right? This is liquidity, right? Same thing that, and I know we don't talk about that, and I think we don't talk about it enough, but it's the same thing here. It's the same exact concept, right? You take this price action out of the equation, and you're just looking at this price action right here. The reason why this generates liquidity is because retail traders are looking at this like a stop loss, or excuse me, a resistance level that they're either going to sell off of, or when price breaks it, they're going to look for maybe a retest and look to take this up, right? So all we're doing is identifying these areas that retail traders are, you know, playing in, where liquidity is building up, because these banks can see where everybody puts their stop loss. They can see where everybody places their orders, right? So that's why the stop pond is there. That's why the FU candle comes in there, and they just basically take people out before they go in their intended direction. So we can see that we have this liquidity building. We can see a nice touch here, a nice touch here. Came just short right in this area, then we came up again, right? This is a clear resistance level that traders are going to be, you know, playing on. And then we had our FU candle, a candle that, you know, look at this price action too, right? If somebody was looking at this on, you know, if you exclude these two little wicks right here, we have 3 touches on this resistance line to the pip. I mean, it's almost perfect. And this is why we refer to this as the clean side, because it's easier for the retail trader to see, the new trader, the beginner trader, right? Because that's what they're taught in the beginning, trend lines, support, and resistance. It's easy for them to identify, so it's easier for them to be enticed by something like this. So then they even throw in the price action. I'll zoom in a bit. They even throw this price action in where it pings off of this, and you have that candle right here that closes that says bearish, followed by a bearish engulfing candle, and then look, it starts pushing down. How many people think people were selling there and putting their stop losses right there? Probably a whole lot of people, right? And then you just have this random candle that just shoots up here and takes them all out, and then it goes down. That's
2 months ago, I would have been selling there.
Right, absolutely.
Yesterday, Jason, don't lie.
Yeah, yesterday.
Thank you very much.
So now we have our FU candle, and look at that price action. That almost doesn't make any sense. And now they're all looking at themselves and scratching their head like, what just happened? And then, of course, they, you know, price goes in their intended direction, right? And then they think in themselves that, look at my analysis was right, but I just got stopped out. So they keep on doing it, thinking it was just a fluke, or, you know, they try to make adjustments and make a bigger stop loss, right? Because they think what they did was right. So now what's happening here is the banks have to hedge their position. So they're buying and selling at the same time. So when they have this push down, this big, let me get this arrow tool up. So now we have this big push down, and now we have this thing in drawdown right here. They have open contracts here that are in drawdown. So now we can see that price is coming up. And this is why we called this trade down here. And it came up right to our entry, I believe. This is the 1 hour. So I think we had something like this. And I think we had about 7 pips drawdown. And then we had our move down. And all they were doing was mitigating from this area, lessen, right? They were lessening those orders, right? So they came up into this area, and that's how we can trade the tailcoats of these banks, right? This is their footprint right here, telling us that they are coming into the market, and then we can get in, get our precise entry, figure out our risk versus reward, and then we can see that we had clear equal lows right here. There were a number of things that made me like this trade, and I'll go over them with you, right? So we had our obvious equal lows, right? That's our target, right? And that's what separates us from the retail trader. They look at these equal highs and equal lows as opportunity. We look at them as targets. Can anybody see what else we have here, which would make me think that they would want to bring price down into this area?
Yes, they're coming down to them.
I don't have the chat open, so
I do. Yep. So user says imbalance.
Exactly. Right. We have unhealthy price action.
And look how clean that is, guys. How clean that is.
Unhealthy price action. You'll hear unhealthy price action if you ever see somebody or anybody talk about IPA, imbalanced price action. And all this is price was just traded one way, right? So there's algorithms that are running behind the scenes, and the market always needs balance. So that's why the market has, and there's other reasons too. If we go on a higher time frame, right? Look at this right here. Our last down move right here, starting at the top of that imbalance, right? That last down move before we have the market come up, right? So this could have potentially open contracts right here that are in drawdown that they need to mitigate from before they push the market, in their intended direction. So there are a lot of reasons that, made me want to, take this down, versus coming up, especially, looking at, what's going on up here. You can see that we had relatively equal highs. We had an FU candle. We had a mitigate. And then since then, we've just been stepping down. Another confirmation that I really liked with this trade setup, and it's the Fibonacci levels that are commonly used with this strategy, is the 71% and the 78. So we have, let me see.
You're right, look a bit awkward line sitting like that.
Yeah,
So it was a little bit shorter on this one. You can see like the 78, depending on where, there's different places that we can take this. Some people like to take the wick. Some people like to take the open or the close or the 50%. There's different areas, and that will range how aggressive or how conservative you are. Typically what I like to do, and I'll show you a better example with Great Britain USD, I really like to look for trade entries with an FU candle that have the 78, 71 zone that fall right in line with, the banker's candle, right? And then I also like to see imbalanced price action as well. And then sometimes even, for example, like I'll show you on Great Britain USD, we have equal lows being created after an FU candle. So there's just lots of confluence there. So for me, this was just, a really, this is the signature trade. If you're confused about the signature trade, if you hear us talk about the aggressive entry or the higher risk entry, this is the signature trade right here. This is just textbook. And as you can see, this just came down and it did not come to our equal lows, but I still think this is going to come down. If anybody's still holding this, I do think this is still going to come down long term. And if we look, I'm just going to pull up some price action here as well, right? Look at this, what's happening here. Let me get rid of the fib so we can see it clearer. Relatively equal highs, enticing more people to sell. Clearing liquidity. Same situation.
It just comes down to create more. Come back
Price coming up and mitigating from that area and rejecting from that 71. So,
and that's a good point. Just real quick, is that, guys, this happens on every single time frame, right? So what Danny's showing you is not. And it's easier to see for most people on the 1 hour or the 4 hour, but he just pulled up a 15-minute chart, and it's happening exactly the same way. Because when you see it, when you start to realize and start to understand how the equal highs and how the support and resistance levels work, and then the FQ candles and all that stuff, it happens on every single time frame. As when you're first brand new, you should just look for it, in my opinion, on the 1 hour or the 4 hour, because this is a little bit easier to see for a new person. But it's happening right in front of us right now.
Right, and I agree. And another thing too, if you're new, I would honestly probably stick more towards the signature trade just until you have a better understanding of how this works, how these smart money concepts are applied, and then go into looking at the higher risk setups, going and looking at, there are other ways. I was actually looking at an oil trade that I marked up, and I'll just show this just because somebody was asking. They they don't see the setups until after it happens. So US 30 was a really good example too of how you can get in if you miss the setup. I'll show you guys really quickly, and then we'll get into some potential setups. Let me see. I'll go US 30 first. Right, looking at US 30 really quickly, right, we have clear equal highs up here, right? And then one thing that I was looking at, drop down a lower time frame. This might not be the best example, but we came up and you can mitigate as it steps up, So like the price came down and then mitigated from, an example first, this FU candle, and then it pushes up. We can step off of this one, and as you can see, it came up and stepped off this one, so you don't have to, if you miss this one, you can get the next one, and then just continue to step up. I think oil might have been a better example, and I'll point out some examples as I go if I see anything. This was a really beautiful setup that I marked up this week. This was a really nice setup here. And this was 2 back-to-back signature trades right here. You can see right here, clear equal highs, FU candle, mitigated, came down, cleared it, FU candle, came down, mitigated. Right here was this is what I was talking about, right? So this candle right here, this price action came down and mitigated from this area right here. That's where we would have set our buy limits, right? So if you miss this, right, and then price starts to push up, we can now drop down to a lower time frame, or you can even stay on that time frame as well. Now you can look at this price action right here, right? I think I might have done it on the 30-minute. I haven't looked at this. Yeah, so it might have been the 30-minute. So you can see that this price action right here that was mitigating from this FU candle, price came up, and then we mitigated from this area, right? So we can get another entry opportunity there. And then we came up and cleared equal highs. So this was, that's just another way that you can do it if you miss this first one. So let me check out the harmonic scanner. I know Jay and I were just talking about Great Britain odd. I think we had odd news last night, so that's why we're most likely going to see odd pairs right now. I believe IJPY again. So we'll look at IJPY in Great Britain odd.
Before you get into that, brother, let me just talk about 2 things real quick. So Danny just showed you guys US 30 and US oil. If you are brand new, just focus on Forex, and because he wanted to show you that this happens all the time, and that was a great example of the US 30 as well. But this, as you're brand new, stick to just Forex, right, and learning the pattern, and that's really what you want to look for. Now, one other thing, real quick, Danny just went over a ton of stuff on the going through and knowing what to look for. Here's one of my key phrases, because I think people are just looking for banker's candles a lot of time. And I tell people a banker's candle does not a trade make. Okay? So just because there's a banker's candle there does not guarantee that there's going to be a reversal there. It doesn't mean that that's going to mitigate off of that. It could go to the next banker's candle. It could go to the next banker's candle, right? So there's got to be confluences in your trading. Yeah, what I tell people is you should have at least 3 reasons to get into a trade. Not 1, not 2. You should have at least 3 reasons. So the reasons that we look for is that IPA, right? That imbalanced price action. We look for the 71 to 78 zone, okay? And you never really want to trade, by the way, past that 88.6. That's one of the things that you'll learn when you start going through, Jordan and Zach stuff and rocks there in IM Dope. And going through and just understanding the confluences that we look for is going to help you have a higher success ratio on your trade. So just don't think that, it's a banker's candle, I've got to sell here, or I've got to buy here. You have to look for, so a little bit more proof. What exactly happened with the FU candle? Where is, and the other part of this, and this gets a little bit down this rabbit hole a little bit more, but where are you? Where is the price action right now in the larger scheme of things called the Wyckoff patterns? Where is this move? And we can go into that a little bit more in depth later if people want to. But it's all in that Unit 5. That knowing where you are, and Danny's talked about this before in the past as well. Knowing where you are in the larger scheme of things will help you to know, another confirmation of where your trade is set up to possibly go. So just wanted to bring up those things and turn it back to you, brother.
Again, I mean, I agree, and I should have, said something when I showed it. I was just showing you guys those pairs because they were just the first to come to my mind that had those examples. I would stay away from those, those pairs, especially if you're brand new. They're just higher risk trades. They just trade differently. The pips are different. I would just stay away. But the price action, the concepts are always the same.
So here's an interesting question. Just on the US 30 real quick. But again, we are not recommending, especially if you are brand new, because US 30 moves rapidly. It has large spreads. But Martina's asking, since we did bring it up, there's no high. On a high, the US 30 is at the highest that it ever has been. So what does that mean? Was what she's asking. That could be applicable to other pairs as well if there are no other no higher highs. Well, usually in Forex, you have a range. So most of the time with Forex, you're not creating all-time highs like we did in the stock market here this last week or two or month. So what are your thoughts on that, Danny?
Yeah, I mean, it just means lack of data. It's the end of the year. We're seeing the most bullish market, across the board with all markets, even stocks, and right now we're just coming into territory that hasn't been traded. So we just don't have a lot of data. I'll pull it up really quickly and show you guys what she or he, I'm not sure who said it, but is referring to. I'll hop on like a weekly time frame. Right, so they're talking about this price action up here, and it's just never been traded in, ever. So, there's just not a lot of data. So, it's just less information that we have to work with. So, looking at it on a bigger scale right here, we just had clear liquidity right here. Right, so this could just be setting something up. I just don't see this carrying on and on and on and on up here. Typically, when we have new higher highs in the market or new lower lows, they're usually short-lived.
Yeah, nothing goes up forever. Look at Bitcoin a year and a half ago. Right. Nothing goes up forever. Nothing goes down forever. As Danny has talked about, many times, the market has to have balance. And that's why we look for that imbalance for that price action to come back down into that area, up into that area. So. Awesome stuff. All right, I'm gonna let you go back to the GA, which you were showing us before there, brother.
Sure. So we got a scan on this. Jay was talking about it. I don't think he is with us anymore. I don't have the videos popped up, so yeah, he's not here anymore, right now. All right. So I haven't really looked at this too much. I know briefly what he was looking at. I'll just kind of run over what I saw. So first, one thing that I was looking at when I was buying this last week, along with Great Britain, New Zealand, we were just stepping down. Price was just stepping down. Excuse me. And we just formed this big correction, this big range. And typically when we see a really large impulsive move that's formed by, that's followed by, typically a big correction as well. So that's why we've seen the Great Britain pairs just in this consolidation mode. Typically, I'm just not a big fan. This is just really messy. Typically, when something is like this, it can just get really confusing for somebody who isn't, as experienced. One thing that, did play into my decision making when I first was looking at a buy opportunity down here was this price action down here, this last institutional push before we had this big move up. So now that we got this harmonic scan, I believe Jay, on a 1 hour, what he pointed out was this FU candle right here. So this, keep in mind, is an example of the higher risk, the more aggressive trade entry, because we're essentially looking for where the market could potentially turn around versus having clear equal highs or clear equal lows with an FU candle that is clearing liquidity, like I showed you with EuroCAD, and then that's giving us an area that we can mitigate from. This example, the market, as we can see, it's just been pushing up, from, I know some people were talking about selling this, I just personally didn't see that, with that odd news last night, we saw, this push up in a lot of odd USD, odd JPY, odd New Zealand, and a few other odd pairs make moves to the downside. So, this has just been pushing up. It is pushing into our 78, 71 zone. So right here, I believe, let me zoom in. So this blue line right here is the bottom of the 1 hour bankers candle. I personally would not be trading this. Again, what you're essentially doing is, with that higher risk trade, right, versus that signature setup, we're looking for the market to turn around. So if I were to trade this, and kind of like what I showed you with those other examples, I just showed you, for example, with like oil and US 30, right? If I were to trade this, instead of just putting a sell limit somewhere up here, hoping that the market hits it and turns around, I would wait for price to start pushing down and then mitigate from the last up move before it started pushing down, come up and then push down. I don't want to just, when the market is just pushing up and it's clearly showing, strong bullish momentum and we can clearly see the strong bullish price action, I just wouldn't want to just hope it turns around here and then, that's just not how I would risk my capital. And again, guys, it's all about quality, not, as soon as you get the quantity, that's when, things can get really dicey for you. I've only taken one trade this week, right? I am really, really picky when it comes to quality, right? I treat this like a business. I follow my trade plan and I don't force trades. If there's nothing there, I just don't take it, right? I have my qualifications for me to enter in different trade setups. And if it's just not there, I just don't force it. And it's simple as that. So for me, I would not be looking to take this right now. But, I think it does have potential. I just personally wouldn't take this right now. And here's the harmonic scan, right? I mean, it did have a lot of reasons to come up, right? I mean, we had equal highs right here, a bunch of equal highs that were created when we had this consolidation. And again, we had this last candle right here. This was that last up push before it started coming down. So the market did have a reason to come back up and mitigate that area. That's why people were looking to sell right here. To me, that was just kind of like a booby trap. Again, because to me, it just wouldn't make sense, especially mitigating off this area that I just showed you, the last down push right here before it came up. It just had too many reasons for price to come back up. Again, all these equal highs right here. There were a ton of institutional candles in here. And again, this big one right here, it just made more sense for price to come back up and mitigate from this area. And that's what we're seeing
before it goes down again
right now. So, odd JPY was the other most recent harmonic scan. Let's take a look at that.
So as Danny's pulling up the odd JPY, I want to just kind of reiterate one thing he just said. Guys, this is what Danny does for a living, right? It's what all of us do pretty much for a living. And he said he took one trade this week. Not one trade today, not one trade, every hour. One trade this week because it's one that qualified in his trading plan, right? So that's another thing I talked about on Saturday is plan your trade and trade your plan. You've got to have a game plan going in here, and as long as you follow that game plan, you'll be successful. But going through and just making sure that you follow exactly what we're talking about and what we're doing and showing you every single day is a huge, huge, huge thing. So he's going to obviously bring up something that looks like anyway.
Yeah, so I just wanted to show you guys too how important a trade plan is. There's I'm going to show you an example, and this is, how detailed you need to be when it comes to trading, right? This is just an example trading plan, right?
It's on my
general rules,
somewhere,
right? Different things that,
I've got to
obviously, 2% risk, yada, yada, yada. But when we get into the actual trade plan, that's a SWOT analysis, right? And I have a video. I actually told Michael that I was going to make a new one. I just haven't got to it, but the information is still the same. The only reason I was going to make a new one is we talked a little bit about the bounce back strategy, which was the previous strategy that we were using prior to this. But the information is still gold. If you go and search, I believe it was titled in the 1000 group, Failing the Plan is Planning to Fail. I am going to make a new one, which is more tailored to our strategy that we're trading now. But this is what I break down. I break down the SWOT analysis and how that can help you, right? That's something Fortune 500 companies do to find out, internal strengths, internal weaknesses, outside perspectives. I don't want to get too much into that, but I break down pre-session routines, post-session routines, defining your business hours and what you do in those business hours. For example, in this one, this person right here said, includes reviewing trades from the previous night, looking at chart opportunities, live session, Tuesday to Friday, talking about this. Watch 1 hour of IML session with Rock or Jordan, right? Trade confirmations. These are their trade confirmations that they need to go over to get into a trade. And then they'll say, for example, if it's the higher risk trade or if it's a signature trade setup, I need at least 4 of these for me to enter a trade, right? Check Forex Factory, time of day, what session, top-down analysis, identify the institutional candle, imbalance, price action, targets, Fibonacci sequence, or confluence, market structure, right? Then the execution of the trade. What needs to happen in order to pull the trigger, to press that sell or buy button, right? Everything identified. Then the management, exactly what to do every step of the way, right? Cutting losses early if I don't believe in the trade anymore. What would make you not believe in the trade anymore? Creating equal highs or creating equal lows. If it's ranger, not a strong reaction from an entry zone. Only stack additional positions if it's risk-free, et cetera, et cetera. I don't want to get too much into this, but you can see how detailed it can actually get and how you need to be. This is treating trading like a business. This is what is mandatory. If you do not do this, I guarantee you will not succeed in trading. I can almost guarantee it. This is more important than risk management.
Trading plan, more important than risk management.
So I definitely highly recommend you guys make a trading plan and watch that video. I'm gonna get it to. I'll definitely make it a point to get to it and make a new one that is more tailored to this strategy. But again, the information is all the same. So definitely.
Now, of course, can we get a copy of Danny's trading plan routine?
Well, that's not actually my trading plan, but I did post something the other day in here. I'm not sure if I remembered to post it into the 1000 group. I'm going to have to double check, but I do have a confirmation list, that I'll send out to you guys. But everything I just showed you right there is literally, and I break down every step, and it's all written out in that video that I just showed you, and that's posted in the 1000 group right now. If you just go to the 1000 group and go to the search, and then if you just type in failing to plan is planning to fail, and you will find that video. And again, just disregard some of the information because it's talking some about the previous strategy that we're using, the bounce back strategy, but the trade plan is the same. I also talk exactly what needs to go into your trade journal. I talk about the SWOT analysis, how you can actually do one for yourself and how it can benefit you and your trading. Failing to plan. I'll just pull this up really quickly, and this is just a really old video, but again, failing to plan is planning to fail. But again, the information on the trade journal, the SWOT analysis right here. So this is it right here. And this is in the 1000 group, and you guys can you can see, I just show every step of the way right here, different examples of what needs to be in your trade plan, the identification phase, the management phase, the entry phase, the exit phase, pre-session routine, post-session routine, all that, all the stuff that you really need. And you can see the bounce back stuff. And this is why I need to redo it. But there's a ton of good information in there. And it's really vital to your success, guys. I really can't stress that enough. So I definitely recommend watching that. you got anything from what we're talking about today, trade plan and risk management. That's what separates losing traders from winning traders. I can't stress that enough. If you're just freestyling this, I mean, you're going to have a very hard time trading, and you're going to find yourself just depositing over and over again. And that's just not what we do. We're professionals. We need to conduct ourselves like that if we want to be successful and do this full time. So let's get into some more trade setups. I don't want to get too off course, and that is some very valuable information.
And guys, before you go into any more trade setups, what he just said, guys, is if I have learned anything over the last almost 3 years of doing this, it's that. It's that this needs to be a calculated, right? It is not trading is, as I say this on Saturday as well, on the Getting Started webinar, trading is not guessing, guys, right? Trading is not gambling. Trading is not flipping a coin and saying, well, it's got to go up or got to go down. Heads, it's going up. That's not what trading is. Trading is a calculated decision that you make based on what's happened in the past, and that trading plan is part of that, and going into depth on that. So please take the stuff that Danny just said really seriously. Is it a little bit more work to go through and to set up your trading plan? Yes. But let me ask you this, how much work is it working for 40 years of your life, right, at 40 hours a week to retire for 40% of what you need to live on and to have the life that you want? So make the plan. If you do what he's talking about doing, you'll have the success that you want to have. And I say this on Saturdays as well. I go through 5 pillars of success on that webinar. I've never had a person come back to me and said, Jason, I did everything that you told me to do and I still failed. It doesn't happen, right? Success leaves clues, and he just gave you a huge clue on what to do if you want to be seriously successful in your trading career. So awesome stuff, brother.
Thank you. And guys, when I first started trading, I did all the stuff that I just, I didn't do all that stuff. I didn't do the trade plan. I wasn't logging my trades. I wasn't taking snapshots of before and after. And I was wondering why I was just refunding my account and busting accounts. I wasn't using proper risk management. And then even when I started to, I just didn't have things planned out, and I was just completely freestyling my trades. I wasn't successful with it. And I just said, if this doesn't change, my results are not going to change. So I just started doing exactly, what I needed to do in order to make this work. And it's the stuff most traders just don't do. I mean, guys, there's a reason why the failure rate is so high in Forex. And it's just a number of things. And that's a big part of it, just being prepared and being organized and treating this like a business. And
John's doing well.
Of course, it goes without saying that proper risk management, that's what makes trading work, because this is a numbers game, right? When we have these setups with this strategy, but we have these risk versus rewards that are really top heavy in our favor. That's why it works, right? But if you're over leveraging some trades and then you're all over the place and you're just throwing in random lot sizes and not measuring your stop losses, those numbers are not going to balance out, and they're not going to balance and end up in your favor. So, I see Jay's back. Jay, I talked a little bit about the Great Britain odd. I don't know if you had anything that you wanted to, I can show my screen because I know you're a little bit laggy. I didn't know if there was anything that you wanted to touch on this.
Don't call me names. You're a little bit laggy.
I am today. I'm still drinking my coffee.
Danny's a little bit awesome today, but Jay, we missed you. Sorry, your computer had issues, brother.
Dude, you guys don't even know the struggles. just to get on the internet in my photo.
Struggle is real. All right, well, you're coming
through threw some extra nuts out to the squirrel. All right, what?
So I know you were talking about this earlier, and you sent me a chart. I just briefly covered it, but I know I didn't know if you wanted to talk about it a little bit more, because I know it was something that you had marked up. I know you were looking at this FU candle on the 1 hour.
Yeah, give me 1 second here. I'm pulling up my TradingView chart.
Yeah, if you want to do that, and then I'll just keep this up so you don't have to share your screen, because
I'm not going to share my screen. We don't want to go there. I will add why this is loading about the using proper risk management. And I don't know if you guys gave this example, but it's if you're not using that tool that Jason showed you and Danny was talking about to get your proper lot size, you can win a trade for 20 pips and lose a trade for 20 pips. And in your head, you're probably thinking you're even, right? But if they're two different currencies, they're not even in most cases. You could literally win 10, you could win 20 and lose 10, and you could potentially not even be even. It just depends on what the currencies are. So, and I did that even when I started with this strategy. I wasn't doing it. I was just all over the place and changing the risk percentage, and the more that you drill down and get that specific, the more success that you'll have and start seeing some growth in your account. So.
And I love what Danny said, guys. This is a numbers game, right? You gotta have the numbers playing in your favor. That's why this strategy works so freaking well, right? Because it's a numbers game. But if you screw the numbers, if you don't use that position size calculator, if you don't, go by your trading plan, if you don't, have a set percentage, right? If you over leverage, if you do the things that you're supposed to do, you're just shooting yourself in the foot. Before you go on, Jay, you might want to stop your video because you're frozen and a little bit audio. But the audio should be fine if you get rid of your video. There we go. As awesome as you look and as much as we want to see that beautiful beard, that's probably better. So, Cool Beans guy, go ahead. Yep, but you're muted still. So if you wanted to talk, hey.
All right, so here's what I was looking at on this. Danny, if you go to the 1 hour or the daily time frame, and then look, there's a banker's candle there. Yeah, right there at the top of your 78. That's a daily banker's candle. So at the bottom of that, you can see it's in this, that whole banker's candle is in the 71 to 78 zone. Pretty much lines up there. And then above that, we have a 1 hour banker's candle up in the wick of that daily candle.
Yeah, I had that.
Yeah, that's the one you had. Yep. And then above that, it's about, let's see, from current price. From current price, it's a couple hundred pips, but we actually have a monthly and a weekly candle that line up as well. So, I'm not saying this is going to sell immediately, but we're coming up on weekly and monthly candles. So
he's looking at this candle right here, guys. That's what.
Looking at a big. This could be one of those big opportunities for when, especially with the GBP stuff that's happening at the beginning of the year, maybe unless Brexit gets pushed off again, but. We could see a big reversal here and see this drop.
I'm happy you pointed that out because I think this is something that a lot of traders don't do, and I think it's probably one of the most important things is getting that bigger picture and that overall agenda of what's going on. And you're not going to see that if you don't go to these higher time frames. And when I was looking at it quickly, I didn't do that. But look at this. I mean, this makes me, more inclined to look at this a little bit closer. Absolutely. That's a really good point. I'm glad you brought that up.
And I don't want to take credit for something that's not mine. These are not all unique thoughts. I learned this stuff from Rock. I know David's on there every day. Every trade he does, he goes like to the monthly and the weekly. And at first I was like, Jesus, why is he looking at the monthly time frame when I just want to get in and get out today? But when you start understanding that the bottom of those weekly candles, it shouldn't break that. And if it does, it's not doing what you thought it was going to do. Then you really understand which way the market is going to go.
Right.
And if it doesn't, then your trade's not valid and it'll save you from losing money on stuff. So
right. I couldn't agree more. I mean, top-down analysis is, something that I've always preached, and it's something that I do, and it's super important. I mean, I've showed a couple examples of Euro USD, and we were looking at that today. Previously in one of the trades that we'll get into. I know we're coming up on the top of the hour, but it has a lot of confluence with those higher time frames that we're talking about right here. So awesome stuff.
And I know you've always preached top-down analysis. I just haven't always been good about it. But, we've talked about my recent success with this strategy, and that's just another piece of it, is actually doing all the things that I was told to do and didn't do, using a trading plan, top-down analysis, all those things that I was like, just happenstance here and there.
Okay.
And that's the type of results I got. So.
And look what's happening now. I mean, if you guys are new, you probably won't know what we're talking about. I mean, your trading and everything about it, your charts and everything, your execution has just done like a 180 because he's doing all the things that, you know, he didn't want to do, or for whatever reason he wasn't doing. And now he's doing it. Now he's applying it. And now he's getting the results. His results are a direct reflection of all that stuff that he's putting in, all that work he's doing. So definitely good job, man. I'm proud of you.
Right. Yeah. And I just say that to help anybody else that's thinking that there's a shortcut, you know. I've tried all the shortcuts. I've been in almost 3 years, guys. And Michael even said yesterday, the short way is the long way. And the long way is the short way. So just take the time, do the work, and it will pay its dividends. So I'll let you.
Absolutely. Since we're on GBP, I will bring up Great Britain USD. We did not get a scan for this, but I think it's something that could potentially be a really nice trade setup. You can see my markup here, and I'll kind of break it down of what I was looking at and why I am looking at a potential buy for this. So first thing you want to ask yourself again, where is the money? Where are retail traders playing? And we could see that we have this, you know, relatively equal lows. And if we take this price action out, and I'll just hop in a replay mode to kind of show you what I'm talking about, right? I'll hide those, right? Look at this right here. That's a support area, right? This is where people are looking to buy, and then they're putting their stop loss somewhere in this area right here, probably somewhere below this wick right here, right? This is what they're looking for. Price is attracted to liquidity because of this, right? So now we can see that price was jammed down into that clearing liquidity. Right, boom, and then boom. Cleared out liquidity, and it went past that stop, or this wick right here, and then right back up. There was an immediate reaction there. That was the banks selling to buy. Now with what we have going on right now, and the reason why I'm looking at this a little bit further, if we look at this price action in this replay mode, we can see that price started to range and started consolidating. You can see right here what was happening. We were creating equal lows right here. So now, looking at this closer, there are a couple of things that I'm looking at. One, we have imbalanced price action. We have a gap right here. We have this FU candle, right? The one that came down and cleared liquidity. We have these equal lows. We have our targets. We can see equal highs, equal highs.
You also have a little imbalance in the middle there where your alert is, yeah.
Yeah, that's why I have my alert there. And you know, again, this is all that confluence, guys. This is a reason for price to jam down. And the reason why I like these setups is because we have a couple different ways we can play this, right? And I talked a little bit about it earlier, and this is the example I wanted to show you. So again, too, you know, this is a flag pattern, right? So a lot of traders are looking to buy off this now. We have this impulse, and we have a flag pattern. And if you're relatively new to trading, a flag pattern, anything that kind of looks like an impulse and then, you know, consolidation and a flag pattern like that, most traders are looking at that for continuation. So that's what we have right here. So when we created these equal lows, we have this imbalance. We have this FU candle, right, where they were selling to buy and jamming price up, and we saw that quick reaction. It immediately pushed down and then pushed up very, very fast, right? Anybody that was looking to buy here and use this as a support, they're looking at it like my analysis was right. You know, we're winning my direction, but I'm sitting on the sidelines now because they got me out of the market, right? So now there's candles of importance. If we take the top of this banker's candle or this FU candle, right? If you ever hear those terms and you're new, they're basically the same thing. It's an institutional candle. We can see that it lines up right into our 71 and our 78 zone. So the two ways that we can play this, and I'm probably going to take the more conservative route just because of this gap right here. And we could see it in the replay mode, this is just price moving really, really fast. And it's like the unhealthy price action, and it was just being traded in one direction really quickly. So the market needs balance. So it gives us point of interest, right? We're not using these as targets. We're not using these as entries. They're just point of interest where the market could potentially come back and fill this, just like we have with the imbalanced price action. So we could see price do this, come down and jam into this area, and it could also come down and fill that gap and then clear these equal lows right here, right? This will also give us an FU candle in this area that we can then mitigate from. So we can either, one, and if I were to do this, I would, because of what's going on with this current price action, I would lower my risk down to 1% or even less. I would take, a buy limit. You could put a buy limit somewhere on this candle, whatever it is, the confirmations or however you do it. Everybody does it differently. Some people like to take that 50%. I like to take the area where the most confluence is. So for me, the open of this candle, that would fill and balance price action, that would clear these lows, and that would also come into the 71, 78 zone. So if you were to set a buy limit there, you would put your stop loss under here. That's the one way you can do it, or you can wait for that price action and be patient, right? Because this could come down and clear this price, come all the way down here. And what's going to happen with that, once you have this data, this new price action, you're going to be able to get a tighter stop loss. So for example, like if you entered right here on the top of this candle right here, you're looking at probably a 30 pip, almost a 40 pip stop loss. So if I got this new price action here, right, and let's just say I had a banker's candle like this, and then price comes up and then comes back down into it, I would be looking at something like, just for example, sake, like a 15, or I would cut the stop loss in half, if not more, right? So and then I'll also have that more confirmation that this was clearing, it is pushing up, I'm creating a new lower high, and then I would take price up. And that's just the difference of those higher risk trades and how you can get more accurate with your entries and get that more confirmation. So that's the way I would do this. I don't know if anybody else has any opinions on this or how they would trade it.
I mean, it depends on everybody's risk tolerance. I know yesterday Jason took the GJ, which looked very much like this, and he took the first entry, and then he also took the second one. Is that correct, Jason?
Yeah. Took two entries, took partials, and then got stopped out of break even.
And one thing you could do, kind of piggybacking on that, and Jason probably did this, was just split his risk. If he only does 2%, he could just do 1% on both of those entries.
Print trading.
Jay's shaking his head. I don't know why he would do that. I have no idea why, but anyway, and that's true, right? So if you're going to have two entries, or if you're going to do a more risky entry, right, then lower your risk. If you're doing 2%, which is your max risk you should do, drop it down to 1% on the riskier entry. But like Danny said, right, the safer entry. Okay, even though you have an FU candle there, even though you have imbalance, even though you have all those things, the safer way of doing it, even though there is a possibility of you missing that trade, which it is what it is, guys. If you're being more conservative, there is a chance you're not going to get in that trade, but there's always another trade. The more conservative route and probably the better route to go is to wait, right? Patience is a virtue, and it will make you money. Till that, till the banker candle comes down, you get the FU candle, the institutional candle, and then you have that reaction, you mitigate off of that. So Danny's setting up a couple of long positions here just to kind of show you what the risk to reward is. And then it is 5 after, but we're going to go ahead and get to some of these questions as well, guys. I know we're getting everyone's coming in saying, stay longer. This is awesome. So I'll let you do that, brother, and we'll get to some questions.
Sure. Yeah, that kind of flew by. So this one right here, guys, with the top of this candle right here, you're looking at about 40 pip stop loss. And if you were to take partials here, you're looking at just short of 2.5 to 1. Up here, you're getting about just over 4.5 on your money. So that example I showed you, if you wait for price to jam down here and then show an FU candle, you're not gonna miss anything, right? It's just being, patient and letting price give you more information. You're gonna be able to get a tighter entry off of that, and you can use that information, that new FU candle, and you're gonna be able to get a tighter stop loss, which will allow you to get higher leverage on it, and then you're probably gonna get a better risk versus reward on it as well. So that's where patience can pay off, right? If you're
it's also just safer, right? I mean, we could be wrong, and it could just blow right through that banker scandal.
Right, absolutely, and that's exactly why I think waiting would be the best option, because when price is jamming down, it could easily blow through that, that other way. We're going to have more confirmation and just, be like, wow, it's reacting. My analysis was correct. Now I have a better FU candle that I can mitigate from, get a tighter entry, and get more leverage on it for that same risk, that same 2%, but you're going to be able to get more money for when it does go, where you anticipate it to go. You're going to get more money for the pip. So I know we probably have a ton of questions. So if you guys want to get into,
yeah, we do. But that's a really important, really important thing that just really escaped my mind for some reason. That was scary, man. I must be getting some onset early Alzheimer's. But anyway, there was something I wanted to say. I'm sure it will come back to me. But again, guys, just understand that everything that we're going over today is vital to your success. You don't have to understand this all today, right? And I know Danny's given you a ton of information, and just awesome stuff that is going to help every single person. As a matter of fact, I think we should probably put this video, in the unit section. Some of the stuff that we've gone over today. It's not stuff that we usually go over, but it is vital to your success to be able to understand a lot of the things that we've been talking about today. So we are going to get into some questions. Martina, I don't understand your question about the ABC. So if you want to reiterate that or explain that better, let me know. Sandy, this is from an hour ago. Said I marked up a chart from a scan this morning. Can you look at it during the session? So I'm not sure which scan it was, Sandy. If we didn't look at that, please let us know. So Michael has a good question. When do you suggest taking partials, since pip count is based on structure? So pip count or based on structure?
For me, both. It also depends on the pair. I will post this. I sent it out recently, and this might help a lot of you. It's kind of a confirmation checklist. So you can see right here, move stop loss to break even 30 to 50 pips in profit. For more volatile pairs, wait until 50 plus, take partial, same thing. So, again, I like to also, include structure there, but, again, it's just protecting your investment, your capital. So, it's a little combination of both.
Yeah, and it also depends on what time frame you're trading too, guys, and where are your targets. And so there's a couple different things that come into, when to take partials, move stop losses, things like that. Larry says, I thought the news was not important with the banker strategy.
It's always something you want to be aware of. You know what I mean? It's, again, it just falls into treating this like a business. And the news is the excuse that the banks use to move the market. So you want to know which pairs have something that could potentially move the market. You know what I mean? Like, it's just being aware.
Yeah, and it's not that the news is not important. It's that we don't shy away from the news now. The news is what makes the market move in the direction that the bankers want it to move in. So if you have obviously an entry point, you go up, tag your entry and fall back down. It can be that you're in the trade already, and then it drops from there. But the news, whether we're not afraid of the news anymore, is more the point, brother. So Tom says the retail traders are playing Russian roulette, just waiting to be taken out. Absolutely, without a doubt. Big Jim, we went over what the FU candle is a bunch of times. Gary says, Danny mentioned in a trading plan last week of the month. What did he mean by this?
So I have investors that I trade for. So the first week of the month sets the tone for me. So, there's different things that might happen that might make me alter my trading plan. So like the first week of the month, I only take certain setups because I don't want to get myself into a hole and set a bad tone for the rest of the month. So the first week of the month, I usually stick to signature setups only. And then once I have, a little bit of equity and I start, I'm in the blue, then I can start opening up to more aggressive entries and stacking positions. And then, same thing with hedge fund traders. When they get to the end of the year, the reason why they buy off the markets and the reason why the market slows down is because they probably reached their quota and they don't want to jeopardize their bonuses. So it's the same thing. If I know I'm going to get paid on the first, and you're going to get to a point eventually when you're paying yourself, if this is what you're going to do to, provide for your family and pay your bills, you need to pay yourself. So whatever that is, and, it's probably going to be the first of the month when you just finished. So if I'm having a really good month and, I've reached a certain quota, I'm going to start slowing down and pumping the brakes coming into the last week of the month. That week 2 is also the most manipulated week of the market. We have FOMC, we have NFP, we have all these things that can, ruin my gains for the month. So I just don't put, as much risk on the table. I'm more selective about my setups, and I also drop my risk, down to 1% or even less, just so I'm not jeopardizing, profits that I'm potentially going to get paid for in a couple of days. So it's just all things that you need to think about and consider when you're putting together your trading plan.
Absolutely, without a doubt. Spino's asking, I'm searching IM Academy site. Where do I find Rock to learn and follow? I show that on the Getting Started webinar there, Spino, if you haven't watched that. But he's in Go Live, so it's im.go live or im.
I'll drop the link to Rock specifically in the chat.
Neat. That is awesome. I was going to share my screen, but that's even better. Love it. All right, so we'll get that to you in the chat. People are saying, great session. Love hearing people's perspective. That's Tom. Stay longer than an hour. We have. All right.
Hey, by the way, David had suggested that we make a favorites video like they do on INL TV. And Michael said we could. I just haven't gotten to it yet. So there's one other video, and then we can put this one or whichever one. When people have, like David said, he had a lot of people that said, oh, I had an aha moment today on that one particular session. Yeah. Those are the ones that we'll put in the favorites. We just haven't gotten around to it. So and also, I'm sorry, I just want to add one other thing. The website has a login issue. I put some debugging code on it. We figured out what it was. It's not something we're going to be able to fix. It's something from IM side. It's only allowing like a certain amount of people to get in, which is like 120 or something, and then it stops letting people request for a while. Then it resets. That's why people can get in later. We're working on a workaround for that. So if you don't get here on time, you're probably not going to get in. So I'm just telling you because you got in today. If you show up at 6:15 tomorrow or 9:15 tomorrow, probably won't get in. You have to watch the recording. So try to show up on time until we get the workaround finished, and we'll just move forward from that. So
cool. That is good information. I appreciate you sharing that, brother, because people are asking me what's going on. So cool. I believe that Sully, I believe that Danny did show the imbalance on the GU chart. Didn't you do that, brother?
I believe so.
Yeah. I think we showed that already. If you need to see it again, Sully, let us know.
Hey, Jason, maybe
Trevor's asking.
Maybe you could make a video on imbalance. Because almost every session Michael does, somebody asks for an explanation of imbalance. So I don't know if it's the way he's describing it, or they just haven't watched that session. But you're good at doing those videos, so put that on your list.
I can show the imbalance really quickly.
Sure.
So we're basically looking for price to be traded one way. And again, market needs balance, algorithm. So we can look right here where I have my alert set. I'm looking at this wick and this wick right here. It's not a lot of imbalance, but the reason why it's significant is because it's right in our entry zone. So we can see this imbalance right here. Price was only traded one way, right? It was only pushed up through, right? It wasn't, traded down back into, like it came down here, came close, but it was never there. So it creates that gap, kind of like this right here. So I hope that clarifies things. So,
Cool. Trevor is asking the EU that was called a few weeks ago. Are we still in that trade, or is it canceled? I believe we took that off, right?
There are no pending trades. All pending trades have been executed or canceled.
We looked at the AJ, Sandy. So not sure if you still need to look at that, but we showed you the AJ or Danny did.
Yeah, we went over that. I think we did. I'm not really sure.
I believe you pulled it up. If you need to look at it again, let us know, Sandy. John says, I totally understand looking at the weekly and monthly charts, but aren't there a lot of trades within those time frames on the shorter time frames? So the reason to look at the weekly and monthly charts is the reason that you want to go with the flow. You want to go with the way that the trend is, with the way that the Wyckoff is showing you, right, where those larger moves are. So yes, there are a ton of trades, as I talked about earlier, John. The strategy that we use, the banker strategy, the imbalance, the equal highs, equal lows, the banker's candle, all that stuff, it happens on every single time frame. You can go down to the 5 minute and see it on there as well. But it's a lot more, sporadic, and a lot more, you're going to have a lot more issues with getting stopped out in that scenario. So we recommend sticking with the 1 hour, 4 hour when you're looking for it. But the reason to go up to the higher time frames is so that you can see the overall pattern, so that you can know, in that Wyckoff schematic that's in the Unit 5 in the 1000 group, you know where you are in the accumulation phase and the distribution phase. Where are you in that information? So that's why you look at the higher time frame. That's why you need to know where are you in that. Even if you're just in there for intraday trade, it's another confirmation to what you're looking at and the trade you're looking at getting into. Agree or disagree, gentlemen?
Absolutely agree. I mean, we had a euro odd trade that we were selling, maybe like a month ago, and we had like a 4 hour setup, but we got a pinpoint entry based off of a monthly and weekly candle. I think it was like a weekly FU candle that we took the 50% of, and it overlined, perfectly with the bottom of the daily candle, right? So it's just stacking that confluence, and you can just get those really pinpoint. And again, you get those pinpoint entries, but you're going to get the overall agenda of what the banks are doing.
Yeah, and that's really what you're looking for, guys. We are riding the coattails of the banks. So you want to know what's in their noggins, what algorithms have they put into this, and what are they trying to do. So JV Sisu, do we still use the web analyzer or just a harmonic scanner? We don't use the web analyzer anymore for this strategy. We get the trade ideas, right, from the harmonic scanner. So that's, it's not, we don't use the information of the take profits or the entries or the stop losses from the harmonic scanner. It's just trade ideas. A lot of them can come through the harmonic scanner as far as that goes. So the people are saying we did not show the AJ, and they're asking to show that. So if we want to do that, we can, or whatever you guys want to do.
Sure. And I see a ton of people asking about gold too.
And gold, yeah. So people are saying, Mr. Gold, you didn't go over gold.
just got a 1 hour scan on the AJ.
That's why people want to look at it. Okay.
So really quickly, guys, on gold, one thing that we pointed out, we were looking at, this institutional area right here where they push price up, or push price down before we got the price pushed up, and we can see that we got a nice reaction from that area. So before I hop on a lower time frame, the first thing that I kind of just marked up before I stopped sharing my screen is this institutional candle right here, where there's that last up push before price came down. So this is definitely, a point of interest, and it could lead to a potential sell opportunity as well. There's just not enough data right now. Looking at a lower time frame, looking at this area right here where we got that rejection, that would have, if you had a buy limit there, right, that's an example of the higher risk trade, the more aggressive trade, because we're just hoping to see the market turn around there. Versus if you were to get down a lower time frame, and you would have been able to see, we talked about this before it happened, earlier in the week. Look at these equal lows, and this is the same thing with, we just talking about with Great USD, right? Wait for this to jam down and clear that liquidity, then we can mitigate off this. This example didn't come, further into it. You can see that, it's hard to see, but there was a wick right here that did come down and test the top of, I'll zoom in so you can see it a little bit better, right? If I take the top of this candle, you can see right here that we came up, and then we did test it. So you would have got an entry there off the top of that candle. And then since then, you can see that we've just been stepping up and stepping up. So looking at what's going on now, you can see that the last down move before up, the last down move here, you can see that price has just been stepping up, price is stepping up, and it's just doing the same thing. So even right now, right, this candle's of interest right here, right? You can see that we're actually on that right now, right? Look where we're getting that reaction to right there, right? So, for me personally, if you didn't get in down here, just keep in mind that this is anything now is just a higher risk trade, and then keep in mind that we do have this area right here where on a higher time frame, a daily institutional candle where price was jammed up right here before we saw it fall off. So we could potentially have open contracts that are still in drawdown there, and clearly this is a perfect example of imbalance, right? Price was just not traded in this area.
Yeah.
Right, so we have a number of things right here. When we were talking about taking this up, from this action down here. So anything here stacked on entries, just higher risk stuff. So just be cautious with that and use proper risk management. I'm right now currently not in anything with gold, but this was something that I was looking at this morning right here, this current price action. JPY really quickly. So I know we're coming up to the 90-minute mark. I think we did pull this up. We just didn't. We kind of got a little distracted. So monthly, right? Look where we're getting that reaction, right? This last up institutional push before we see this massive monthly bearish engulfing candle, then price just melts away. So, right, look where we're getting that reaction to. Right, and we could have dropped down. Right, look at that. We're talking about a weekly and monthly time frame. Look at that accuracy.
Mm.
Right, that's why it's important to go to these higher time frames. If you're on 15-minute, you're not going to see this stuff, guys. You're not going to see that overall direction. You're not going to see that push up before that big fall off. Right, get down on a lower time frame. We can clearly see that price is just falling right now. I would not be interested in anything right now. There's definitely, as you can see that they were mitigating from those areas, lessening those orders. And since then, it's just been falling. So, and as you can see right here, it's just been stepping down. Prior to the news event last night, let me see, it might be better on I think it was somewhere right in this price action right here, the start of that move up before price came down. Right, price came up and mitigated from that area. Let me see on like a 1 hour. Right, so like the bottom of this last up. Right, so that was where price was pushed up, come down, and mitigated from that area. And then it's just been falling since. That was the news event last night for Odd News. And then right now, anything would be a higher risk trade because you're essentially looking for where the market can just turn around. And right now, it's just there's a lot of bearish momentum right now. And like we saw, we mitigated from those higher time frame candles. So I just, we can clearly see this right here. This is of importance. And I'm talking about this candle right here. Right, that last down push before we had that push up. And I believe we just got a new scan on this. Yeah, so we got a 4-hour scan in that area. But I just would not be looking to just buy here or set any type of buy limit. If I were to do something, it would be, again, looking for price to, start pushing up, get some type of reaction there, and then look for a, candle on lower time frame where I can mitigate from and then push up. I just do not like when there's a strong move down, and then I'm just trying to pinpoint where the market's going to spin around. That's just not how I trade. So I just wouldn't, I would recommend leaving this alone right now. So hope that helped, guys.
Cool. Awesome. So last question. EJ is asking, can you please go over how it is that you're getting trade ideas from the Harmonic Scanner.
I mean, we talk about it every single day, guys. We're just taking that Harmonic scan. Literally, like if you look at the Telegram alert, or I think he's getting plugged into the Facebook group, we're just taking it for that information to go and look at that pair and just look for these confirmations, these equal highs, equal lows, looking for certain candles that might be, mitigated from. We're looking for imbalance. We're just taking it for what it's worth. We're not taking a Harmonic scan and looking at the buy. We're not looking at the entries. We're not looking at the TPs or the stop loss. We're just taking it a pattern for us to bring our focus to that pair. So we're not like scouring through the market trying to find pairs to trade.
Just like the AJ you just looked at.
Right. Yeah. Right. So like I just get the Harmonic scan and I didn't even look at the scan until afterwards. Right. I just get the alert for AJ and then I just go and I do my analysis on the pair.
Absolutely. And Tom says, based off the Harmonic scan, that is why you say the banker's candles can't hide. Absolutely. Good stuff. Okay, guys, if you have value on today's know in the chat, we are going to wrap up here. We have stayed way past what we normally do. So if you got value, please go ahead and let us know. We will be back. Same bat time, same bat channel tomorrow, as Jay said. If you want to be here live, get here on time. Get here on time. The most important thing, guys, is just to, what Michael talks about every single day, and that is just getting here and master this stuff. Okay? This is all about you learning what to look for and learning what we do every single day. One of the things that I learned on this journey that I'll share with you guys just as a wrap up here is that if you're doing this right, trading should not be a rush. Trading should not be an adrenaline filled action sport. It should actually be boring if you're doing it correctly, because if you're using proper money management, if you're using proper analysis, if you're going through and doing what you're supposed to be doing, guess what, guys? That stuff's boring. But you know what's not boring? A 6, 7, or 8 figure trading account. That's not boring. So really important that you guys understand that all you have to do here is stick and stay, right? And you'll get your pay. Stick and stay and you'll get your pay. So excited that you all were on here today with us. Excited that you got a ton of nuggets. We got a brilliant session, best of all of them combined, very well explained. Again, great info, brilliant, great teaching, guys. So this is all accolades to you, Danny. So appreciate you, brother, and all you do. You too, Jay. You're awesome, dude. David, thanks for being here. Waylon, you're blacked out, so I'm not even sure if you're here or not. But I appreciate all you guys being on with us today. It has been an awesome session one more time. Hey, there he is.
Guys, I've been out of the picture, but my mom, who's running away right now, she just signed up with us, guys. She wants to learn how to trade with us. She's super excited, and she's been following me, watching the results, watching you guys. She's been following along this whole time. So we are here behind the scenes, learning, profiting, having fun, sharing, inspiring, all that cool stuff. Back to you, Jason.
Awesome. All right, welcome, Mom, to the family.
Let's go.
Good choice, without a doubt. All right, guys, have a wonderful rest of your. What is today? Thursday. We'll be back tomorrow.
Well, she's like laying on the floor behind me. She's hiding.
Sweet. Awesome. Yeah. Don't have any interest in seeing that. So, guys, tomorrow morning we'll be back here 9 o'clock Eastern time. Please be on time if you want to be here with us live, and we will see you then. God bless everybody. We'll talk to you soon. Thanks.
What's 9 o'clock Eastern time and our time? 1 o'clock? 2 o'clock?